Ladies and gentlemen, here in this video, I will tell you why I think there is a good chance that Tesla skyrockets coming tomorrow. And if you have not heard my theory on this, well, stick around. Tomorrow is not only reciprocal tariff day, but for Tesla, it's a massive single stock catalyst because we also get delivery numbers. And let me be the first to tell you, probably literally ever, delivery numbers don't matter. High, low, doesn't matter. Now, obviously, if we get a higher number, that's better than if we get a lower number. But in the grand scope of things, it doesn't matter in context to what happened in the last 3 months. See, what happened in the last 3 months was multifold, if you will. Production clearly got hampered switching over to the new Model Y. That has been a variable in this. But there's also been a lot of questions around Tesla's demand because of Elon Musk's association with the administration. There's been demand destruction, demand concerns via Elon's politics. Okay, so to some degree, the delivery number does not matter tomorrow. That's not what is going to move Tesla. What is going to move Tesla is if Tesla provides a little bit of color and clarity to why Q1 is weak. Now, my expectation is probably deliveries around 335,000 or so, give or take a couple thousand, wouldn't surprise me. That is below analyst consensus, which is about 377,000 deliveries. So I think on face value, deliveries are going to come in weak tomorrow. But it depends what Tesla says about this, okay? If Tesla says that essentially demand is strong, the changeover from the old Model Y to the new Model Y slowed down production, slowed down the capacity to deliver vehicles, but something along the lines of that is over and we're back to normal for Q2. That is what is going to send Tesla stock higher because it's not a demand problem. It is a production problem. In fact, today, part of the reason why Tesla did so well was Forbes actually came out and said, there's a lot of demand at Tesla showrooms. Tesla China had one of its best weekly insurance registration numbers ever. Not to mention the Tesla Model Y was the best-selling EV in China last month. Okay, there's a lot of good news today from a demand perspective for Tesla. And tomorrow is really going to tie all of this together. And hopefully we get some clarity that Q2 is going to be back to normal. If that's what we get, that's going to be a positive. Okay, no matter what the delivery number actually is. Now, today, you could be getting some of that front running of that for tomorrow. Because, again, I think a lot of logical investors understand that Tesla's not facing a demand problem. They're facing the production problem. And that's what hurt Q1. Again, before we go any further, I do want to share with you the actual estimates that Wall Street has and someone like Troy Teslake expects for Q1 deliveries. But let me be clear. I don't think the specific number matters too much because this is not just a normal quarter. You had the Model Y that launched. Logical investors, again, know that it takes time to kind of scale that and ramp that. And I actually think to a certain degree there may have been difficulties scaling production of the Model Y. It happened a little bit slower than I would have expected. Now, it looks like things are back on track now. That's what matters, and that's what Wall Street will care about. And you also had, again, the political landscape of Elon and protest and blah, 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 demand concerns that I think are going to really be put to rest tomorrow. And I think you're going to hear a lot less about politics and demand problems going ahead. Now, Wall Street is expecting a delivery number of 377,000. Troy Teslake expects 355,000. That seems to be more of where the consensus is at, around 350 to 355,000. Again, I think we could see a number 335,000. So even below all of this. And I think Tesla could still skyrocket on that kind of number. And just so we're all clear, this number will come out before 9:30 a.m. in the morning tomorrow. Now, tomorrow we also have reciprocal tariffs. Now, that will be very interesting because I have kind of a different view of this than a lot of people have on Wall Street. My view on reciprocal tariffs is the only thing that really matters is the economy, obviously earnings, okay? Putting tariffs on companies, essentially putting a tax on many companies, is not a good thing, right? Tomorrow, and really markets, they move based on expectations. So if we're expecting a 15% tariff and get a 20% tariff, then that's negative, right? That's a problem. Short term, markets come down. If we get a 20%, if we get a 15% tariff and we're expecting a 20% tariff, then that's a little bit better than expected. Maybe markets can move higher on that. But in the grand scope of things, it's still bad for the economy. It's still bad for earnings season. And from all indications that we have, these tariffs should start immediately. So there shouldn't be a multi-month delay in this or whatnot. So no matter what, I feel like this is negative, right? Tariffs are negative. And whether or not we, rise tomorrow on that or fall on that based on expectations, I don't think it changes anything for markets. That's not, I don't think it's the catalyst that pushes us back to new all-time highs. I mean, think about it even in context, like Trump decided to not do reciprocal tariffs on April 1st because it's April Fool's Day, my birthday today, and do them on April 2nd because he doesn't want people to think it's like a joke, that they're going to be just here one day, gone the next, right? There's no indication, in my opinion, that tariffs are going to be put on and then taken off, or that there's going to be any material deals really done anytime soon, okay? They're using this as a way to collect revenue, okay, and protect America's domestic interest. Over time, great. That's probably a good thing. Short term, it's not. So for everyone to think tomorrow is this big catalyst, I don't really buy that. Now, it's also going to be pretty interesting how the timeline of tomorrow plays out, okay? Because we're expecting to hear from Trump at 4 p.m. in the Rose Garden to get the tariffs actually announced, and then they should be signed and go into effect shortly thereafter. But normally we start getting a lot of rumors around this, okay? Today, the rumor is that pretty much expect a 20% tariff on most of everything. It seems like the markets took that mainly as positive, okay? But we should get more kind of rumors throughout the day tomorrow, heading into that announcement and after hours. So it's not that tomorrow you're going to wake up and there's a tariff announcement and markets are going to react to that. The real reaction is going to come Thursday. But it's not even the big catalyst of this week. The big catalyst of this week is Friday with the jobs report, unemployment rate, and the speech from Fed Jerome Powell. That is the big catalyst because back to basics, Wall Street wants to know how the economy is doing, and even more basic than that, how all of these things are going to affect earnings. Tariffs, whether they're 15 or 20% tomorrow, going to have a hit to earnings. Wall Street thinks it's going to raise inflation. I think it hurts growth more, and that can hurt company margins more than actually be inflationary. I have a different view on this than Wall Street does. Generally speaking, I don't think tariffs are going to be inflationary at all. I think they're just going to help push us into a recession that creates maybe even a little bit of deflation. So that's kind of my thought on tomorrow. So the big catalyst for Tesla waking up tomorrow is delivery numbers. coming out at about 9:30 in the morning. And then later in the day, whether or not we get, rumors or whatnot, but at 4 p.m., you're going to get the tariffs that really affect the markets heading into Thursday. And we could see markets bounce a bit on the tariff announcement. Again, if the tariffs are weaker, smaller than expected. But it's not the end of the correction moment, right? Depending on what the tariff number is. It's not the end all be all. We recover V-shaped recovery to new all-time highs. That is not what tomorrow is about. Whether or not we put in more of a lasting bottom for markets, I think comes down to Friday. Again, the speech from Powell, the jobs report. Now, what you seen yesterday around the 300-day moving average is a lot of support. A lot of support came in around that 300-day moving average. You bounce back up. Today was a relatively good day as well. At least it looked like it was going to be could have been really bad in the morning. Things kind of recovered. Okay. So over the next couple of days, you want to watch that 300-day moving average. If we break down from there, that puts us into a much larger range, right? From your 300-day moving average down to your 500-day moving average, that would actually be a drop of almost 9%. Once you break below that 300-day moving average and catch some momentum to the downside, there's not too much in terms of support until you get to about 500 on the SPY, which is roughly that 500-day moving average. So it could open you up for more downside. That's where it gets a little bit weird again for Tesla, because I think tomorrow could be a really good day for Tesla. But then how does the markets take the whole tariff situation? If tomorrow's a good day as far as deliveries, but really, again, Tesla saying Q2's essentially back to normal, that's my expectation, that, that's going to be positive. If the tariff announcement is taken as positive, that's a double positive. That would likely be really good for Tesla. Okay, that would likely send Tesla back into the 300s. Now, if delivery numbers are good, the guidance from Tesla essentially is good, but tariffs are taken poorly, how does that affect Tesla? It's very hard to know. But you can see via the massive outperformance today of Tesla, a lot of concerns are starting to kind of fade to the back burner. The demand concerns, political concerns. And even there was a report Donald Trump said last night that Elon is going to be focusing more on Tesla here soon. That he's going to be leaving Doge. Now, he's not actually leaving Doge, but he technically can't work on Doge more than 130 days out of a 365-day year. So it's going to be weird in that regard, but people are optimistic that Elon's going to be back at Tesla, day in, day out, helping to run operations. Now, today we did have a little bit weaker than expected data with JOLTS job openings, manufacturing PMIs, the Economic Optimism Index, Dallas Fed Services Index. All of these really came in weaker than expected. But again, Wall Street's just gearing up for tariffs, and the big catalyst, to a lesser extent on Thursday, but mainly on Friday. Tomorrow, we will get the ADP employment change for March. You're expecting, anywhere from 105,000 job ads to 60,000 job ads in the private sector. That is the ADP employment change. It's like the non-government jobs report, if you will. So, sometimes Wall Street cares about that. Sometimes they don't. It just kind of depends if it's a big, positive number, big beat, or a big miss. On Thursday, you get the exports, imports, and balance of trade, as well as initial jobless claims. And then you also get the ISM services PMIs. And then again on Friday, unemployment rate is expected to move up from 4.1% to 4.2%. Non-farm payroll is expected between 128,000 and 80,000. Anything higher than 128,000 is positive. Anything lower than 80,000 is negative. And then to wrap up your week, you have a speech from Fed Jerome Powell. So believe it or not, I'm kind of in a weird place where I'm actually really bullish on Tesla coming tomorrow, but I have no idea how the markets are going to take the tariff announcement. Like I believe in my core that it's not really about tariffs anymore. It's about the economy. And again, whether it's 15, 20% or blah, 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 it's not good for earnings and it's not good for the economy. So it's probably not good for stocks. Okay. Short term, again, you can get a positive reaction even on bad news, right? I've said multiple times over the history of this channel's history that markets can handle bad news really good. They can't handle uncertainty. But there's a fine line between bad news that's just, okay, that's bad, or bad news that actually turns into something that is negative fundamentally for markets. Like tariffs are fundamentally negative for the economy, for earnings seasons over the next couple of quarters at least, and for recession odds. So although, we want to see how markets react over the next 24 to 48 hours, Friday's really the big day. And it's kind of like last week, right? You went up Monday and Tuesday, you sold off Wednesday, you had a kind of muted day on Thursday, and then Friday sent you to the low of the week. Like you actually were down somewhere around 3% on the week, 2.5%, 3% or so on the week because of Friday. That's something similar that is not guaranteed, but could happen this week. And I think it's more important what happens on Friday than what happens tomorrow. But I'm actually pretty bullish on Tesla. I think Tesla will give us guidance that Q2 things are back to normal. And as I've said here on this channel, especially in the last, couple of weeks, if you're ever curious about Tesla's demand, remember 2022. I assume a lot of you guys were investors in Tesla in 2022 as well. Bad year. Why? Because Tesla had a bit of a demand problem. I mean, let's face it, bit of a demand problem. And what did Tesla do? They cut prices. Well, if Tesla has a demand problem, ever again, I think it's a pretty clear playbook. They're going to cut prices. Okay, there's going to be a lot of incentives coming out. We don't have that right now. So from that perspective, it's hard to be concerned about demand. I think it's really the production that has slowed down. And we're starting to see that in some of the data that came out today, especially, that caused Tesla to move higher. So I'm thinking Tesla could have a 5, 10, even 12% positive day coming tomorrow, as long as, they give us the right statement following the delivery numbers. 8% higher from here roughly is 296. 10% higher is roughly 302. 12% higher puts you at about 307. That's the kind of upside that I think we could see tomorrow. If it's bad, Tesla kind of has a history of falling 10% on bad delivery numbers. A 10% drop from here puts you down to about 246. Okay, it's kind of the range I'm expecting. Between 246 and like 310 could be in the cards tomorrow. So I think it's going to be quite a big move nonetheless. With that said, ladies and gentlemen, let me know your thoughts on this down below in the comments section. I know there's a lot of bears, and honestly, that leaves me even more bullish. Tesla's down a lot on these demand, concerns, where I think the demand concerns at this point have bottomed. I think expectations are going to move higher from here. And let's face it, you had Goldman Sachs, you've had JP Morgan, you've had pretty much all of your major, firms that have slashed their delivery targets for Tesla this year. It's going to be a lot easier for Tesla to start impressing to the upside on some of those delivery numbers throughout the rest of this year based on the lower expectations that we now have. So kind of my thoughts. Let me know what you guys think down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.